What's up, YouTube? I just finished buying some more real estate online, sitting on my couch at home. This is a amazing world we live in. In case you don't know, this is Joe Cacciapaglia. I'm talking about, well, lately I'm talking a lot about buying properties on Lofty, which is a place where you can buy fractional real estate online. Also, a little bit on Groundfloor. I'm going to give you a very brief update on some things I figured out about Groundfloor that are both, interesting to me at the end. I've been looking for some other platforms to invest in as well. I've spent a lot of time trying to find some good ones for you, and they all really have some flaws at the moment. And I think it's because it's a new industry. Just like the title of this says, a lot of people think that buying real estate online is a scam at the moment. I've seen that, insult hurled at Lofty, at Arrived Homes, at Landa, just about everybody online that's selling real shares. At some point or another, even Ground Floor, which is one of my favorites so far. I think there's a reason for it, and I think the reason is, it's a new industry. It's kind of the Wild West. There's a lot of people losing money. Like I said, I just clicked order on. I just picked up 10 tokens of this one here. I think this is sticking with my strategy of buying extremely discounted tokens, doing some relatively minimal due diligence on what I think the sale value of this property is. This is one that's actually been taken down from their marketplace links, but there's you can because it's been put up for sale in the real world, so that this property is actually was listed for sale. Although I think they took it back down. I found out about it on the investor Discord. So if you're on Lofty and you're not looking at that Discord regularly, you should be. They were something they had posted that somebody had listed 26 tokens at $24. I jumped in and got 10 of them after, checking. It's the Chicago market again, not a place that would be investing if I'm spending a ton of money, and I probably have to think about how many individual properties I'm going to pick up there now that I've started to get a few of them. Um, I just don't love it. It's not a fast growing market. There's a lot of it's not a very landlord friendly place. You can actually see in the notes on this one, they've had a lot of problems with the trying to evict tenants. This is just again for me a pure value play. I think that based on the price of the token that I paid, what I think it will sell for in real life, and I think that they already had um, talked to agents, and on the low end thought it was going to go for 280. Even if it goes a little bit below that, 280,000. Even if it goes a little bit below that, I'll be okay. Although it can't go much after closing costs and everything. But it is right. Is this one? Yeah, but it's this is it's always so. This is something I figured out, and this math will be important later. But let's see, 408,094 divided by 8780. So they're using this estimated value for their market cap, not the actual trading price for their market cap. Um, that because they're doing that I was actually thrown off, and I'm gonna give you a correction on. I'll just do it now, right? So it talked about this 1317 South Solano Drive. This was that commercial property my last video was about. If you remember, I had this spreadsheet where I was looking at, okay, this was their market cap number, this was their NOI, and I was trying to figure out where, how they were getting to their 31.33% return. It's going to be a little bit different today. I had taken their market cap, subtracted the debt because of the way the tokens work, and that got me here. But that didn't quite work out. But what I realized is if you divide this number by $50, because the market cap is being calculated at $50, and then multiplied it by 58, which is what it was trading for, it got you very close to this number. It was a little concerning. It still didn't get you here. It was, the math made it look like there was a few tokens off still. And so I talked to a couple of very helpful people on the Discord. One of them mentioned in particular that sometimes tokens that are owed to the owner won't be issued yet, but will be reflected in the returns or when there could just be some small discrepancies because of timings of tokens, and it looked like a really small number relative to the total, so I was pretty comfortable with that. I think that calculation makes sense now. Although I am working on, I'm going to share a model with you, looking at like what do your returns really look like buying into something like this. Uh, but I'm going to save that for another day because it's a pretty detailed, it's a pretty detailed spreadsheet I'm putting together, and it's some real hardcore nerd stuff, and I want to get it all right before I put it out there. And I also think it's going to put some of you to sleep. In any case, I'm already going to share some nerd stuff with you today, though. So sorry about that. If you don't want to hear about the math of any of this stuff, feel free to leave. But please like it on the way out, because that's what people are supposed to do. You're supposed to like my videos. I heard about it. I'm supposed to ask you anyway. Um, so one of the things, because I've been really focused on this strategy of buying discounted tokens, it got me wondering, you know, why are there so many discounted tokens? And so let me back up a little bit. I'm going to go back to my spreadsheet, got something new. Why do I invest in real estate, right? Like, what am I looking for? It's really two questions, right? Like, what do I get out of it? And why do I like that as an investment? And so, when I'm looking at a real estate opportunity in real life, which I do for my day job, and I should back up, I've been in just, why would you listen to me about this? I'm definitely not an expert in anything online, but I am an expert in real estate investing. I've been in this industry almost 20 years. I've been involved in over $3 billion worth of transactions. Someone recently reminded me I should tell you more about the number of transactions than how long I've been doing it. That's over literally hundreds of deals. Not all of them mine. I've invested that whole time for myself, but I've also always helped clients invest in real estate, and that's anything from individuals buying their first property to I've helped large pension funds, life insurance companies, those sorts of public REITs with very large investments in things like malls, large scale office development, hotels, self storage. Pretty much you name it, and I've done some of it. And so I think that's why I'm very comfortable weighing in on the real estate aspects of these investments. Obviously, I'm pretty uncomfortable when we start talking about the technology involved, the way they use tokens and that sort of thing. In any case, we're usually looking for cash flow, which is just the money that we get from the property every month. We're looking for appreciation, which means, the property value going up. One a lot of people don't think about is amortization or your debt pay down. Most of the time when we are investing in real estate, we have a mortgage and somebody else is paying that mortgage. That somebody else is usually your tenant. When you're on Lofty, it's actually even weirder because it is often the previous owner or seller is paying that debt. So it's a little bit different there. The tax advantages, our U.S. tax code is amazing for real estate investors. You can make a lot of money and pay very little taxes. You can even shield some of your income from other sources with real estate if you're doing it properly. Obviously, that's something you have to talk to a tax professional about, not me. So those are the benefits that you get. But the some of the additional reasons you can use leverage. It's easier to get a mortgage on investment property than it is to get similar debt on any other type of investment. You can get margin on stocks, but you're typically not getting the same level of leverage. You're not getting 30-year fixed rates. You still get, it's just not nearly as comparable. Control, when you buy real estate directly, you have complete control. Um, you know, this is one that on Lofty is you're giving up a lot of it because you're having to vote with a bunch of other people. One of the reasons I really like the real estate market is it's very inefficient. And if you know anything about market theory, inefficient markets are the ones where that produce profits, right? It's easier to make profits the less efficient market is. And then track record, right? Like real estate has been making people money for hundreds, if not thousands of years. That's obviously something that's going against any of the online platforms. None of them have a very long track record, but that's what I'm going to look at today. For Lofty is what their track record looks like so far as tokens go. I did want to mention the market inefficiency. It's true in real estate. It's also, even though you wouldn't think so because this is all online, but it's definitely true in this token market at the moment. And so that's a good thing. So anyway, let's move that aside. Now we're really getting into the nerd stuff. So I went on their site today. I took a snapshot of this. I actually copied and pasted all these numbers and just deleted everything except for the prices. Um, I took all those token prices and then just wanted to do a little math. And I want to give you a couple of caveats here. Um, One, these definitely don't represent 100% of the tokens that have ever been listed. These are just the ones that are on there now. Even like the one that I just showed you I bought isn't on here at the moment. So they've definitely delisted some. I think that will only, I think if you brought back everything that wasn't on here, it would even make the numbers worse. I don't know that for a fact, but just based on my discussions with other investors in Discord, it doesn't seem that there are a whole lot of high flyers that have disappeared. And so what did I want to do? So, and I'm also, the second thing I want to mention is that I'm assuming that every single token was originally issued at $50. I know that's the case today. I don't know if that's always been the case. It seems like it has been. And so I think that's a safe assumption. But if somebody's watching this and they know that that is not accurate, I'd love to hear about it. And so I just, wanted to look at a couple different things. One, I looked at the average price of these tokens today. The average price across all of them is just $40.25, which means, and one of the things, I'm ignoring the yield at the moment. And a lot of these tokens have provided a good yield. And so I'm only looking at asset prices. So, this is what we're looking at here, right? Like whether you're appreciating or not. And actually, most of them are losing value. But it doesn't, just because somebody's lost 20% of their value or 1950, which is the average, doesn't mean that they lost that much money, because along the way they probably picked up some rent payments that might have made up some portion of this. Now, uh, of course, they were expecting to get those rent payments plus maintain, you'd assume you'd maintain your $50 token value if that was a fair value. But so on average, we've seen this a pretty big loss, right? Almost 20%. I looked at the median also because if you look at averages, when you're looking at the mean, which is what this actual average is, sometimes it can be skewed by really big winners or losers. But if you look at the median, which is actually just the middle one, you'll see the same thing, right? You'll see $10 loss, so very close, 20%, asset value loss. I was really surprised by this, right? But the more I thought about it, I shouldn't be, because I'm finding so many of these deep discounted tokens, and so there's a lot of them that are losing money relative to their initial offer price. And so I want to see, well, okay, how many are up versus down? So there's 129 total that I counted here. 18 are currently above $50. 99 are below, so 76%, almost 77% are below that initial price. If you add these together, obviously you're missing a few. There's some that are exactly 50, so they didn't show up at either, right, under or over. So 14% did better. This is part of the reason why I'm so focused on trying to show you some of the property level due diligence that you should be doing, because you can't just look at that token, see the yield that they're giving you, and say, that's what I want, and buy it, right? You have to really understand, is that yield secure? Is that what it's going to be over the whole life of the loan? Is my value secure? Am I going to get a 20% yield but lose 20% in value? That's not great in the short run. Maybe in the long run, I'm okay with that, because I make up, if it's held long enough, I'll make up for it. one issue you run into with that is if that's your plan, I'm going to just hold this for a long time and keep getting yield. But then someone like me comes along, buys it at half the price you did, and sees a profit in selling it for a little bit more, but still a loss for you. We can put a vote together and sell it. So that's, part of that issue of not being able to control it comes into play there. But the real interesting thing that I thought is, okay, well, let's see a lot of losers, but how many lost more than $10? Which, $10 is 20% of your value, right? And I mean, we know it's going to be half because of the median, but like, what does that really look like, right? And it's 64 properties, 64 of the 129, so almost exactly half, and that should have been obvious. I put this together what I wanted to calculate before I put all the numbers in and figured out what the answers were. So as soon as I saw that the median was a 20% loss, then I was going to know this, right? So almost exactly half have lost more than 20% of their initial value. It's a big number. Only so then I want to also see like how many have gained that, and only two properties have gained that much. And so less than 2%. One thing that I think is really interesting about this is it's these two properties. Um, I looked at one of them, decided not to buy, but I don't think they're bad properties. I think, from my strict value, um, approach, they didn't cut it. I think the yields look really good, but the interesting thing is they're both managed by the same person, right? And so, he's obvious. Oh, did I just click the same one twice? I clicked the same one twice. He's obviously done a good job. I think it's possible there's priced his properties well up front, like he was more fair with investors when he listed them. And so, it gave him the ability to move up in value. But I also think something else is going on. And I don't know how much this effect is helping him, but he's somebody who's also very active on the Discord. He's very helpful. He's one of the people that answered questions for me. And I wonder how much people want to invest in his properties because of that relationship, right? Like, a lot of business is done in the world due to relationships. And if I'm on a platform, somebody's helping me a lot, and I have the opportunity to throw $50 into one of his properties, he's doing a good job on the yield side. I might jump right in and not really question like if what the dollar amount is. And I think one of the things when I looked at one of his properties that concerned me was, okay, he's doing a great job managing that. What if something happens to him? Is that property worth that same amount? Can another manager come in and make the same, amount of money for you? And that's I think what made me make that. I'd have to go back and look, but I think that was um the real issue for me, right? Is that it's really that you're buying into a business that he's operating well, a lot more than it is that these particular properties are just great. Um, I think anytime that you're investing in short-term rentals, there's a little bit of that risk unless it is just an amazing property, right? If it's a okay property and it's just somebody's killing it on the platform, you're really investing in them more than you are that property. And that's not what I'm here for. I mean, if I want to invest in somebody's business, I think that's something I could do elsewhere. Although it doesn't mean that's not what you should use this for. So that's a lot, right? It's a lot of to take in. Most of the tokens that got put up are now at a loss. Sorry about that. Just had some technical difficulties where I froze for a second. I had to restart my screen recorder. If anybody has recommendations on a good screen recorder, I've had problems the last couple videos, so I wouldn't mind hearing it. Yeah, but pardon that interruption. Yeah, as I mentioned, most of these have traded at a loss. What does that mean? One, I think partially because it's a very new platform. Obviously it's terrible that a bunch of people lost money early on. I think, I'm sure a lot of them weren't doing their due diligence on the properties. I think the timing didn't help because certain real estate markets have just gotten hurt over that period of time. Um, And I think that there is, obviously I'm still buying tokens. I think there's opportunities to be had here. I don't think this is a scam. I think that it is just a matter of, it's a marketplace, and you have to really pay attention to what you're buying on that marketplace. And that's why, so one of the things, I am going to continue to buy until I feel some reason not to. But I'm going to double down on the due diligence that I'm doing, really try to understand where the value is, and again, I started looking at this not because my investments in the real world aren't doing well, because I actually, whenever all of my recent investments I've been extremely happy with, but it is, I'm looking for something where I can have a friend or relative or potential client who's not ready to do a house hack or buy an investment property, remotely somewhere, doesn't have the cash to get that multifamily property, but is looking to get some real estate exposure. I mean, I don't think this is something that should ever, at least at the, in the at the state it's in today, it doesn't make a lot of sense to be a huge portion of your net worth. Um, but I think it's something that it should be a very useful tool. And part of it is I think it's a great learning tool, right? Like you can truly understand, like, you get a lot of novices that come to me and want to understand why would they get a worse cash flow in San Antonio than they would if they can just buy in Akron, Ohio, or Dayton, or you get a lot of those markets where just the rent to price ratio looks amazing. And I think one of the neat things about this platform is, I've looked at a bunch of properties in those markets that, somebody bought thinking that they were getting a great yield, and realized, like, hey, that market really matters, right? Like that, the surface numbers didn't work out. And so, I still think it's a great learning tool. I think that there's opportunity to make money, but if you're prudent and really looking at, your investments in a really sharp manner, I mean, there are, even though there's not a whole bunch that have appreciated a lot, yeah, I don't think that you have to have that level of appreciation to do well, because they all have relatively good yields, right? If you compare the yields to the yields on real world assets, a lot of the lofty yields are higher. It's primarily because of the way they treat the debt and the ones that have debt, where it's basically outside of the entity and not being paid for out of your NOI. I think there's both good and bad about that, and like as I mentioned, I'm going to talk about that in a future video. There's just a lot to unpack in it, and I'm still trying to decide if it's a net positive or negative. And I think the answer, it really ends up being it depends. But so, I think please take this as a warning, right? Like there are definitely a lot of risks on this platform. You can have a token that looks like it's doing well, giving you, some yield, but you might only ever get that yield in, over time, if the asset price isn't there to back up these low valuations. And I do think some of the really cheap tokens, and that's why I'm buying them, are worth more than their price today, right? Like I think part of it is this is an inefficient market. I think that's really all I'm going to say about that for now. Like I said, I don't think it's a scam. I think that uh, it's just a marketplace, right? They're just trying to provide you. And I think that too many people just are looking at it as, look at this property, look at this return, click a button, now I own it. And I don't think that that's the right way to use the platform. I think you really need to be looking at, what's the asset that I'm buying? What's the price of that asset relative to this token? Like, is that a fair price? Am I going to get hurt if I liquidate it? Um, and so overall, I still like the platform. I think you have to just be very selective with what you pick. The cash flow, as I mentioned, because of the way they treat debt, especially with the ones where there's loans, I think you get much better cash flow. Um, I think you really get hurt on appreciation for the same reason. If there is the loan, if you have a completely unlevered property, your appreciation is the same as your market appreciation. Your amortization is just weird. Again, because of the loan treatment, it's actually, somebody else is paying it. So, but you're not getting the benefit. It's actually diluting you. And that's, again, I think, something I'm going to talk about in the future. Tax advantages, I'm really not sure about this. I know we're going to get, they lump everything in one tax form. I don't necessarily, I don't know yet what the outcome is going to be there. It feels like it's not going to be the same benefit that I get when I own directly, but I honestly don't know the answer yet. And so next year, once I've run it through my CPA, I'll have a better idea. Should I do it up front? Probably. Um, at the moment, I just think it makes sense, especially because we're getting close to the end of the year. I'll just do it when I handle my taxes. I'll give you an update then. I also don't have anywhere near enough money in on here yet that it's going to affect my taxes in any meaningful way. Leverage, we're definitely getting it on some of the properties. We're levering up our cash flow and levering down our appreciation, which is sort of weird. Again, more on that in the future. Control, we don't have as much control on it as if you bought your own property, but we do get to vote. We do get to sway some of the other investors by talking to them on Discord. So we have some control, not enough. Definitely some market inefficiencies, and like we just went through the track record, I think that's where we're really falling down at the moment. Just so many that haven't done well. But I think over time, one thing that would be interesting to do, and I don't know that they provide the data for me to do it, would to be to look at when each of these are issued and, if there was some cutoff where they started doing significantly better. That's everything I'm going to talk about Lofty today. As I mentioned, I want to talk a little bit about Groundfloor. This so far is the platform that I prefer for if I've got someone that comes to me, they're just trying to get a little bit of real estate exposure, looking for a high yield, don't really want to take as much risk. And I like this a lot. It is just if you haven't seen any of my previous videos about it, it's just a place where you can buy small pieces of some of a hard money lender's debt. So they lend money to somebody who's going to fix and flip a home. They do the due diligence on that person. They provide you with some, although not a whole lot, and on the property and on the market. You get a piece of that mortgage, and so which entitles you to some money in the future. One of the things that I liked about this is, I could just take a lump sum, and I showed you how to use the investment wizard in a previous video. And these are actually all orders that it set up for me the last time I did that investment wizard. It says 0 because this is a couple of things that I learned. One, they take a long time to actually um, close those orders because they tell you how many days remaining, and that's when it's actually going to close and fund. So until then, your account sort of sits in limbo. I had put a $5,000 in and stuck it through that wizard, and right now it's showing $0. You see, it shows that I have that in the account, but I actually put a second 5 in, thinking I was going to buy some more, and that's when it brought me to the realization that one of the things I thought is this is great. Yeah, I can use the wizard. I can get really wide diversification. The first time I set it up, I think it identified 27 properties, and so or 27 notes, or they call them LROs, which is a limited recourse obligation, which is it's still little pieces of debt, like what as I described. Although it's more technical than that, but that's I think a pretty safe way to look at it. But so when I went to do it again, I realized that they only have 7 new loans since the last time that I did it. And so if I went and did use the wizard again, it'd be putting like 700 or 800 bucks in each of these. I actually really liked this very small allocation to each. And so it made me realize I can't put very big lump sums in each month and still get a lot of diversification. One of the things I have to start to think about is like, how much is okay to go to each loan? Like maybe if I'm okay with $700 or $800 per loan. I really liked the idea though of just it being a couple $100 each, right? I think the wider diversification. So these are, decent yields, although I think almost all lower than the yields. Well, let's see. Yeah, maybe we'll do a similar thing with yields later. a lot of the lofty properties are yielding, you know, somewhat more than those, and some of them a lot more. But this is an interest rate that you're being paid. So unless the borrower defaults, that's a guaranteed rate, right? Like you're going to get that amount. If they default, you might have to foreclose. So there's still risk, but this rate is a lot more secure. It's not going to fluctuate. The downside of that is it's not going to go up over time either, right? But so those are just a couple little things I learned about Groundfloor. I still really like this platform. Um, I've been for the last few years more interested in investing in debt. Anyway, most of my personal net worth is actually in private mortgages that I created by selling real estate and holding the debt. Um, I think that that's a great strategy, but for someone who's not in a situation where they can just do that easily, I really like this platform for that. Um, it doesn't mean I don't, it doesn't mean that for everybody that's going to be a better solution than Lofty or some of the other platforms that I promise I am going to get to. So far, I've gone through several of them that I think are not great, and so I guess I'll share that info at some point. But I'm trying to find another good one where I can put some money on, start buying a couple of properties. If anybody has recommendations, please share them. One thing I always forget to mention in the description, there is the code to get a $50 token on Lofty. There's also a code that you can get, and I don't think yeah, they just call it get free money on here. Um, oh, I got a pending one. I didn't even know that. Or is that for the one? I think that's for the one that I invested. No, maybe not. But anyway, when you do it, I'm gonna just get off of that because I get scared. Let's see. Go to this. Yeah. So I got so far I've got 100 rewards currently. Um, there's $20 for every 1,000 that. I think that there was some other referral thing too that I got 50 when I first got on, but maybe I didn't actually get that. Maybe that's just when you refer to somebody else. In any case, there's a link below. It does something like that. You definitely want to look at that yourself. Do your own due diligence before investing, but it is relatively free money if you're going to buy something on here. Anyway, the Lofty one, as far as I could tell, was completely free. I bought my first token without doing anything. Uh, no, I dumped a lot of info on you today. Still have more that I want to share, but like I said, I'm really trying to organize my thoughts. And I know it's scary that a video like this is me having somewhat organized thoughts, in my opinion. I know I'm rambling. Gonna stop that now. Uh, I think that's everything I have to say. So until next time, I'm going to keep making mistakes so that you don't have to.